Hey everyone, and welcome back. Today we're going to do a deep dive into a couple of stocks that have had a bit of a rough go of it lately, but that some analysts think are poised for a pretty big comeback in 2025.
You know, it's always interesting to me how sentiment can change so quickly for certain companies.
Yeah.
You know, they can be doing pretty well overall, but they
Yeah.
could get caught in a downdraft. But I think that creates opportunities for people who are willing to kind of look past the short term and see what's actually happening.
Absolutely. So we're going to be looking at an article today by The Motley Fool,
Yeah.
which of course is a pretty well-known financial services company. I think their tagline is making the world smarter, happier, and richer. Or something like that.
Yeah.
But they do a lot of investment advice. And we're going to be taking a look at an article that they published about Wingstop and Duolingo, both of which have seen their stock price take a little bit of a dip recently. So let's jump right in. So first up is Wingstop, ticker symbol WINGYING. And their stock has fallen nearly 50% from its high point just 6 months ago. So that's pretty significant drop. What do you think happened there?
Well, it seems like there's a few things going on. Comparable store sales growth has slowed down. So that's basically saying existing locations aren't growing as fast as they used to. And they also had an earnings miss. So their profit didn't quite meet what analysts were expecting. And they issued guidance for the future that was a little bit disappointing.
So is it kind of this thing where, investors are thinking that Wingstop's best days are behind it?
Yeah, I think that's a big part of it. Wingstop was one of the big winners of the pandemic.
Right.
They were set up so well for digital orders and takeout when everyone was, hesitant to dine in.
Mm-hmm.
And as the world has kind of returned to a more normal state,
Yeah.
it seems like, their growth has maybe cooled off a little bit.
Yeah, makes sense. But Wingstop's got a pretty long history of success, right?
They do. They've been delivering positive comparable store sales growth for over 20 years.
Wow.
Which is pretty impressive.
Yeah.
So, that kind of suggests that they have a pretty resilient business model.
Yeah.
So it's possible that this is just a temporary setback.
Right.
We'll have to dig into the numbers a little bit and see. But
yeah, let's take a look at those numbers.
Yeah. So in the third quarter of 2024, their earnings fell short of analysts' estimates. And then their fourth quarter results, which came out in February of this year, they did beat profit targets by 10%.
Okay.
However, their comparable store sales growth continued to decelerate.
So I guess even though they were beating profit expectations, that growth slowing down is what's worrying investors?
Right. And it all comes down to expectations.
Yeah.
And based on the guidance that they've issued, it looks like this trend of slower growth is likely to continue.
How much slower are we talking about here?
Well, for 2025, they're predicting same restaurant sales growth in the low to mid-single digits. So to put that in perspective, their full-year comparable store sales growth for 2024 was 20%.
Oh, wow. Yeah, that's a big difference.
So it's a significant slowdown.
So I'm guessing that's why analysts are lowering their profit forecasts for the next couple of years.
Yeah, exactly. And that raises the question, is Wingstop stock really as cheap as it seems after this recent price drop?
Right, because even though the price has come down,
Right.
if the earnings are going to be lower, then
Right.
it might actually not be
Right.
as cheap as it looks.
Exactly. Especially when you consider that they're currently trading at 60 times this year's expected earnings and 45 times next year's.
That's pretty high.
That's pretty high, yeah.
Yeah.
It suggests that investors are still expecting a lot of growth,
Right.
even though the company themselves are predicting a slowdown.
So we've got slowing growth, high valuation. Is there anything positive to say about Wingstop at this point?
Well, there's definitely some bright spots. Despite the slowing growth, their average revenue per location has climbed to an impressive $2.1 million.
Okay.
And that's with a relatively small store footprint compared to other restaurant chains.
Oh, so even though they're not opening as many new locations, they're making more money from the ones that they have.
Exactly. And new franchisees are still coming on board.
Okay.
And their franchising model is very scalable.
Right.
So that means that their earnings growth could actually outpace their sales growth moving forward.
That's interesting. So even if they're selling fewer wings, they could actually be making more profit.
Right.
Gotcha.
And the article highlighted this. Even in the latest report, their revenue increased by 28%, but their profits surged by 42%.
Wow.
It was pretty significant.
Yeah, that's huge. So they're managing their costs well and becoming more profitable.
Yeah, definitely. It's a good reminder that even though they're facing some challenges, they're still fundamentally a strong business. Now let's shift gears a little bit and talk about Duolingo. I think their story has some interesting parallels.
Okay, yeah. I'm intrigued. Tell me more.
to Wingstops. So Duolingo. Ticker symbol DUOL.
Mm-hmm.
Their stock is down too, right?
Yeah, so are investors worried about them for the same reasons as Wingstop? Slowing growth, maybe a valuation that got a little bit ahead of itself?
Yeah, I think there are definitely some similarities there. Duolingo had a really amazing run in 2023 and expectations were really high. But their latest earnings report, while positive in some aspects, it had a few details that worried investors.
Okay, well, let's start with the good news. What were some of the highlights from their earnings report?
Well, a lot of good news, actually. So for starters, their user base continues to grow at a really impressive rate. So monthly active users were up 32% year over year,
Okay.
reaching 116.7 million.
Wow, that's a lot of people learning language.
Yeah, it's huge. And their daily active users saw an even bigger jump, 51% to 40.5 million.
Wow, so a lot of regulars.
Yeah. And on top of that, the number of people paying for their premium service grew by an impressive 42%.
Okay, so people are clearly finding value in what Duolingo's offering. More users, more engagement, more paid subscribers. That all sounds pretty good to me. So what's the problem? Why is the stock down?
Well, just like Wingstop, Duolingo missed earnings estimates after a long streak of exceeding them.
Okay.
And their guidance for 2025 suggests that their growth may be slowing down.
So it's that expectations game again. Wall Street was just expecting even more from them.
Yeah, exactly.
Yeah.
And even though their numbers are still very strong, they're not as strong as some analysts had hoped for.
Okay, can you give us some more specifics on what their guidance looks like?
Sure. So they're forecasting a 25% increase in bookings for 2025, which is still pretty good growth.
Yeah.
But it represents a significant slowdown compared to the 42% year-over-year increase they reported for the fourth quarter of 2024, and the 40% increase for the full year 2024.
So it seems like Duolingo's facing some similar headwinds as Wingstop. The pandemic-fueled surge in demand is starting to fade, and growth is normalizing a little bit. But just like Wingstop, are there still some reasons to be optimistic about Duolingo's long-term prospects?
Absolutely. So, for one thing, the fact that their daily active users are growing faster than their monthly active users is a really strong indication that people are becoming more engaged with the app.
That makes sense. If people are using it more frequently, they're obviously finding it valuable and are more likely to stick with it.
Exactly. And while their revenue growth might be slowing down, their profitability is actually improving. So Duolingo predicts that their adjusted EBITDA, which is a measure of operating profitability, should climb about 40% higher in 2025.
So even though they might not be growing as fast as they used to, they're becoming more efficient and more profitable, which is obviously important for long-term sustainability, right?
It is. It suggests that they're transitioning from a, high growth, high investment phase to a more mature phase where they can really focus on maximizing profitability.
Okay, so we've got these two companies, both facing slowing growth after a pandemic boom. Both have seen their stock prices take a hit as a result. But they both also have some underlying strength and reasons to be optimistic about their futures. It's almost like they're both standing at a crossroads right now, trying to figure out their next move.
I think that's a great analogy.
Yeah.
And that's what makes these situations so interesting for investors,
Yeah.
trying to figure out which path these companies are going to take and whether their current stock prices reflect the true potential of their businesses.
So if I'm listening to this deep dive right now and I'm thinking about investing in either Wingstop or Duolingo, what are some of the key questions I should be asking myself?
Well, that's a great question. I think one of the most important things to consider is whether you believe these companies can continue to innovate and adapt to a changing market.
So can Wingstop expand beyond wings? Can Duolingo become the go-to platform for all kinds of learning, not just languages?
Exactly. Another key question is whether you're comfortable with the level of risk associated with these stocks. Both Wingstop and Duolingo are trading at relatively high valuations.
Yeah.
Which means investor expectations are still elevated.
Right. So if their growth continues to slow down or they stumble in any way, their stock prices could fall further.
That's definitely a possibility. So you really need to weigh the potential rewards against the risks.
Right.
And decide if these stocks align with your overall investment goals and risk tolerance.
And of course, we're not offering any financial advice here. We're just sharing some information and insights to help you make your own decisions.
Yeah, exactly. We're deep dive guides, not financial advisors.
That's right. Now, there's something that's been on my mind as we've been talking about these companies. We've focused a lot on their financial performance and their recent stock price movements. But what about the bigger picture? What are some of the broader trends that are shaping the industries they operate in? How do those trends impact their long-term prospects?
That's a really great point. It's always important to look at the bigger picture. So let's take a look at each company's industry and see what we can learn.
Sounds good to me. Let's start with Wingstop. What's happening in the world of fast casual restaurants these days?
Well, one of the biggest trends is the continued rise of digital ordering and delivery.
Right.
Consumers are increasingly looking for convenience,
Yeah.
and they're willing to pay a premium for it.
Yeah, I've definitely become much more reliant on those food delivery apps. It's just so easy.
Exactly. And this trend is only going to continue to grow.
Yeah.
So for a company like Wingstop, which already has a really strong digital ordering infrastructure, this is a major tailwind.
Yeah, it's like they're ahead of the curve in that regard.
They are. Another trend that's benefiting Wingstop is the growing popularity of specialized menus. Consumers are becoming more discerning in their tastes,
Right.
and they're looking for restaurants that focus on doing one thing really well.
It's like that old saying, jack of all trades, master of none.
Exactly. And Wingstop is definitely a master of wings.
Right.
They've built their entire brand around it.
Right.
And they've become known for quality and consistency.
So even though their growth may be slowing down, they're still well-positioned to benefit from some of the key trends shaping the restaurant industry.
I agree. Now let's shift our focus to Duolingo and the world of education technology, or EdTech. This is another industry that's experiencing rapid growth and transformation.
Absolutely. What are some of the biggest trends driving that growth?
Well, one of the most significant trends is the increasing demand for personalized learning experiences.
Okay.
People want to learn at their own pace, in their own way, and on their own schedule.
It's like the one-size-fits-all approach to education is becoming increasingly outdated.
Yeah, exactly. And technology is really enabling this shift towards personalized learning. With online courses, mobile apps, all these digital tools, people have access to a wider range of learning options than ever before.
It's amazing to think about how technology is democratizing education.
Yeah, it really is.
Yeah.
And another major trend is the rising cost of traditional education. College tuition has been skyrocketing for years.
Right.
And a lot of people are looking for more affordable alternatives.
So how does Duolingo fit into this picture?
Well, Duolingo is a prime example of a company that's making education more accessible, personalized, and affordable.
Right.
Their app is available for free.
Right.
And it offers a gamified approach to language learning that a lot of people find engaging and effective.
It's like they figured out how to make learning fun.
Exactly. And they're constantly innovating and adding new features to their app. They recently launched a new subscription tier that offers personalized lessons and feedback from expert tutors.
That's cool. So they're not just relying on their free app to attract users. They're also building out a premium offering for those who want a more personalized, immersive learning experience.
That's right. And that's another trend that's shaping the edtech industry, the rise of freemium models.
Where you can access basic features for free, but you pay for the premium features.
Exactly. This model is proven to be really successful for companies like Duolingo.
Right.
Because it allows them to reach a wider audience and then convert a portion of those users into paying customers.
Yeah, it's a good strategy.
Yeah.
So even though Duolingo is facing some challenges in the short term, it seems like they're well positioned to benefit from the long-term growth of the edtech market.
Yeah, I would agree with that assessment. Of course, there are always risks and uncertainties in any business.
Right.
But both Wingstop and Duolingo have demonstrated an ability to adapt and innovate, which are essential qualities for any company operating in today's rapidly changing environment.
Okay, so we've covered a lot of ground today. We've talked about Wingstop's slowing growth and high valuation, Duolingo's missed earnings, and their ambitious plans for the future. We've also explored the broader trends shaping the restaurant and edtech industries. So where do we go from here? What's the takeaway for our listeners?
Well, I think the most important takeaway is that investing is a process of continual learning and evaluation. There's no magic formula for success. It's all about doing your research, understanding the risks and opportunities, and making decisions that align with your own individual investment goals and risk tolerance.
Right. So it's not about trying to time the market perfectly or pick the next hot stock. It's about making informed decisions based on a solid understanding of the companies and the industries you're investing in.
Exactly. And that's what we've tried to do today. We've given you some information and insights to help you form your own opinions about Wingstop and Duolingo.
We've given you the raw ingredients. Now it's up to you to cook up your own investment strategy.
I like that analogy. And remember, the most important ingredient of all is knowledge. So keep learning, keep exploring, and keep deep diving.
So to bring it all back to our listener, do you think these dips in Wingstop and Duolingo's stock prices are those buying opportunities, or are they a warning sign of deeper problems?
I mean, that's the million-dollar question, right?
Yeah.
And as always, there's no easy answer. Both companies have a really compelling story. They've got strong track records. They seem to be well-positioned to capitalize on some really significant industry trends. But at the same time, they are facing some headwinds, slowing growth, potentially lofty valuations.
So it comes down to each individual investor weighing the risks and the potential rewards based on their own investment goals and risk tolerance.
Exactly. I mean, some investors might look at this and say, hey, this is a chance to buy a great company at a discount, betting on that long-term growth potential. Others might be a little more cautious and want to wait for clearer signs of a turnaround before they jump in.
It's like trying to decide if you should order that second helping of wings, You're still hungry for more, but your wallet might feel a little bit lighter afterward.
That's a great way to put it. And just like deciding on that second helping of wings, there's no right or wrong answer. It all depends on your individual appetite for risk and your assessment of the situation.
So what are some key takeaways that our listener can use to make their own informed decision?
Well, I think it's crucial to remember that past performance doesn't guarantee future results. Both Wingstop and Duolingo, they had impressive runs during the pandemic, but that doesn't necessarily mean they're going to be able to maintain that pace of growth as things normalize.
Yeah, so don't just blindly chase those past returns. Do your homework. Understand the factors that are driving the company's current performance.
Absolutely. And remember that valuation matters. Even if a company is growing, if its stock price is already really high, it might not have a lot of room to run. And if that growth falters, the stock could drop pretty significantly.
Right. So those high price-to-earnings ratios we were talking about earlier for both Wingstop and Duolingo suggest that there's already a lot of optimism baked into their stock prices.
Exactly.
Yeah.
It's also important to think about the competitive landscape. Both of these companies operate in industries where there's a lot of competition. So can they continue to differentiate themselves and maintain their market share?
Can they stay ahead of the curve and adapt to new trends and technologies?
Exactly. Those are all really important questions for investors to consider.
Okay, so lots to think about. We've given our listeners a lot of information about Wingstop and Duolingo today. But it's ultimately up to each individual to decide whether these companies are right for their own portfolio.
That's right. We've provided the map, but it's up to each listener to choose their own adventure.
And just like any good adventure, there are bound to be some twists and turns along the way. So stay informed, stay curious, and remember, investing is a marathon, not a sprint.
Well said. And hey, who knows? Maybe the next time we do a deep dive on these companies, their stock prices will be soaring to new heights.
Or maybe they'll have hit another bump in the road. That's what's so exciting about the market, right? You never know what's going to happen next.
That's what keeps it interesting. So to all of our listeners out there, we encourage you to continue exploring and researching and deep diving into the world of investing. There's always something new to learn. And you never know. You might just discover your next big investment opportunity.
And until then, happy investing, everyone.